Today the stock market went lower. Is it the time for the bears to strike? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today's SPY was down 0.55%, and I have to ask you all a very simple question. Why is it that most of you love the negativity and you want this market to crash? There's still so many people calling for a stock market crash like it's just something that is supposed to continue to happen over and over just because we had a bear market last year. Statistically speaking, stock market crashes are very rare and very difficult to predict, but there's still so many people trying to predict one and trying to call for one, let alone trying to perfectly time one. Let me know where that obsession is coming from, and let me know why you love digesting all of that negativity and negative news instead of just simply following what the price action and trend are telling you. So on this channel, we simply let the price action do all the talking, and in order for this bull trend to roll over and die, we need to see SPY breaking down below these critical support zones, which is going to start with SPY 411. You can see from the price action, we did not close below that level, and we did bounce off of the rising 13 EMA, even though we are starting to close below the 5 EMA, so there are definitely some warning signs you need to pay attention to. Remember, critical resistance is 414, so you have no business being bullish until we break out above that level. Never get bullish at resistance and never get bearish at support, and we are very close to support, so be very careful if you're getting overly bearish. Once we break 411, we need to come down here and break down below 407, and then we are officially losing this bull trend, and we are very likely going to roll over and die, which means we're at least coming down to backfill some of these gaps. Do not guess when those gaps are going to get filled. Wait for the price action to roll over and lose the bull trend, and then you can trade in the direction of the downtrend on the way to go fill those gaps, and you're going to have a much simpler time. Trying to guess tops and predict crashes and guess when things are going to happen, because yes, it is guessing, is not how you're going to ever be a successful trader. So believe me when I tell you, learn to follow price action and learn to understand when the price action is guiding you on the direction of the trade, and right now there is no guidance from the price action. You are essentially in a trading range between 411 and 414 until we get the breakout, and then you're only going to get a few dollar move after that, so it's still going to be a very sideways looking market. If you're expecting a crash of minus 20% or a bull run of plus 15%, you're in the wrong market. This is going to be very sideways and very choppy until we get a very clean break out of this range. Remember, if you zoom out, which I do suggest a lot of you do, the market has been going absolutely nowhere. So make sure you have realistic expectations, and a lot of the money being made right now is through very small move trades and having a very disciplined trading strategy. That consists of buying at support in a bull trend and selling at resistance and not getting greedy, knowing when to lock your profits, because you never know when you're going to get rejected from resistance, so lock those profits and wait for a break above resistance. We've been absolutely crushing this market in the Stocks Channel Discord because we are simply following price action with a very objective approach. So watch that resistance at 414 and that support at 411, and then if we break 411, we're going to 407, and if we break 414, we're going to 417. On the NASDAQ 100 triple Qs, we were down 0.76% today, and we're closing right on top of what could be critical support at the rising 20 daily moving average, but I consider the critical support the breakout zone of the daily highs down here between 311 and this previous daily low at 313. You can also manage your risk up here at 315, which is perfectly fine, but do keep in mind we can still break below 315 and still find critical support just a couple of dollars lower. However, if we break that critical support zone, we are likely losing the bull trend and rolling over, which means we're likely coming back down to 307 to 308. The bull breakout at this point is going to be the break above 319 for the gap close at 322 and the price target at 327. On the Dow Jones, we were down 0.31% today, and the Dow Jones also closed down below the 5 EMA, but we have the bull trend and we have critical support down here at 334, so we really need to see critical support getting lost from the price action to go any lower. Below 334, we will have that gap to fill at 329, but again, don't assume we're going to break support, let the price action prove it. The next bull breakout will be above 340, and then we'll likely start running towards 346. On the Russell 2000 IWM ETF, we were down 0.52% today, and the Russell 2000 is now stuck in a very clear range between 176 and about 179, and we're going to get a break of that range in the very near future. We're not getting bullish until we can break out of the resistance, which is above 181, and we also have a gap to fill around that zone as well. So if you're going to pick a direction in the small caps, it is likely down until we get a breakout above 181, and then we are likely going to have a very substantial bull rally. So wait for the break of 181, or at least least the break of 179, and to the downside, we need to break support at 176 and then 173, and then we will likely go fill the gap at 172 and retest critical support at 170. On the ARKK ETF, we were down 3.78% today as Tesla, one of the top holdings, got absolutely slammed today, so we are getting this lower low breakdown towards support at 37. Remember, below 37, we have a valid double top, and below 36, we have a valid triple top, which could take us all the way down to fill the gap below 32. So you have no business being bullish in the ARKK ETF until we break critical resistance at 40.5. On the VIX, we were up 4.32% today as the VIX is getting a little bit of a dead cat bounce after many consecutive red days in a row, and there's really no volatility in this market until we see the VIX getting all the way back above 20. So this is going to be more indicative of a bull trend while the VIX is trading at these lower levels. There's a lot of bears saying that this is bearish and it means the VIX is going to absolutely skyrocket out of here, and that is absolutely BS. There is no way for you to know the VIX is going to 30 or 40. Wait for the VIX to at least break above 20, and that'll tell us the VIX is starting to spike and we could see more volatility. Look at the VIX behavior all year long, how much time we spent below 20. That is exactly what you typically see in a bull trend. On Bitcoin, we're currently down 2.13%, and Bitcoin is coming back down to the breakout zone at 28,000, which is completely normal after a bull breakout to get a retest. However, the retest means we need to bounce from this support. If we don't bounce from 28,000, we're likely coming back down to 27,000, and below 27,000, we're starting to lose the bull trend. So if you're a Bitcoin bull, you need to be careful because once these things start to roll over and die, it typically moves very quickly, which means we could flush all the way back down towards 25,000. If we bounce from 28,000, that will look more bullish, but wait for that break above 29,400, and then we will likely start pushing up to about 31,000. On Google stock, we are up 1.07% today with relative strength in Google and closing back over the 20 daily moving average, but still finding resistance right here, right around 106, and we still have that gap to fill at 106.84. There's a great chance that gap is going to fill before earnings, which is just in a few more days, and then we also have the gap up there right around 110. Manage your risk at critical support between 100 and 102, and you can stay bullish as long as we're above that support. On Amazon stock, we were down 0.47% today with a rejection around this resistance at 104, and we're really going to see some type of blue skies push higher once we start closing above 104. So wait for that confirmation of that breakout, and then we'll likely go straight to 107, and then the gap fill just below 109 and possibly even as high as 115, but we need to break that very critical resistance. You can stay bullish as long as we're above 100 to 102, and if we break that, we're likely going to much lower prices, which could include going all the way back down towards 94. On Microsoft stock, we were down 0.81% today, closing right on top of the rising 20 daily moving average of support at 285, and we still have critical support below at 283. If we lose these two support zones, we're likely going to fill the gaps at 281 and 276, and the next bull breakout is going to be the break of 290 for that price target at 296. On Nvidia stock, we were down 2.96% today with another rejection from that previous daily high right around 280, and we're right back down to critical support right around 270. Below 270, it's going to look like we're double topping and rolling over, and it could be the end of this bull trend, which means we need to go through a correction that could take us all the way back down towards 242. However, I suggest waiting until Nvidia breaks below very critical support at 262 before getting bearish, because that is a very strong support level. If we get any bull breakouts, we're looking for 282.5, and if we somehow break that level, we're likely going straight to 300. On Tesla stock, we were down 9.75% today as Tesla was the man of the hour today after an abysmal earnings report, and it absolutely got crushed today. It gapped down below support at 167, and it's well on its way towards the next support just below 160, and then below that we have the gap fill at 146. There were some people saying I was too focused on that gap fill at 146. However, we know gaps typically get filled, and we know Tesla was in a short-term downtrend, and now you can see why it's important to be aware of those gaps. If you stayed bullish on Tesla this whole time, you've been having a horrible time, and it's going to only get worse if we get rejected from this resistance. Now, we are a little oversold, and there is the possibility of a dead cat bounce, so watch resistance at 167 and 173. And then above that, it is possible to fill the gap at 177. However, we also have gaps to the downside, and nobody knows which gaps are going to fill first, so go in the direction of the trend, and this is currently lower highs and lower lows, which is a downtrend. That means you should be very cautious buying Tesla long, so be very disciplined. And if you're already underwater on Tesla because you've been ignoring the technicals, that's just a constant reminder that you need to let the price action do all the talking. On Apple stock, we were down 0.58% as Apple is still looking very strong with the price action above all the moving averages in the strong bull trend and still above this recent support right around 165. And it's very likely we are going to reach our price targets at 169 and the gap fill at 171 before earnings. Remember, so goes Apple typically goes the entire market because it is a huge big tech name and it's going to move the entire index. However, that could work in both directions, so if Apple does lose this support zone at 163, we will be looking for that gap fill to the downside right around 158. On the financials, we were down 0.3% today, trying to hold right around this resistance just above 33, and any rejection from here will take us to fill some gaps to the downside. The industrials were down 0.18% today, still closing above all the moving averages and building up a bull trend, but we have resistance just above, right above 101. On the healthcare sector, we were down 0.41% today, and this really just looks like a pullback within a bull trend, and we now do have the bull trend with all the moving averages. We just need to break back over resistance at 134. The energy sector was down 0.88% today, bouncing off of the rising 50 EMA, and we're also going to have that 20 simple moving average crossing back over very soon, but we do have this gap to fill to the downside. If we do lose support at 84, look for the gap fill just below 83. So jumping back over to the S&P 500, remember there's a lot of negativity and a lot of bearish sentiment, a lot of people calling for stock market crashes this year. And I just want to constantly remind you that stock market crashes are very rare and you need to be very careful on how much of that information you digest. Practice looking at the chart, looking at the price action, and looking at the current trend, and then just simply manage your risk and make a trade plan around what the chart is giving you. If you go get all of these baked in biases of where these stocks should be going or when the stock market's going to crash or when the next recession is, you are going to be a much worse trader and not a better trader. If you really study what trading is, it's about managing risk and having a very disciplined approach, which means you need to know exactly when you enter and exit trades, and you should know that before you even enter them. Draw up a trade plan if we slice through critical support and start to crash, and also draw up the trade plan if we start to break resistance and climb higher, and then trade the trade plan that the price action gives you. If we break resistance, you have the trade plan for the bullish scenario, and if we break support, you have the trade plan for the bearish scenario. If you're only looking in one direction, you're going to get blindsided by the market, so stay objective and let the price action do all the talking. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.